Hi, thanks for tuning in. This is a weekend review for the week ending March 17th, 2023. Happy St. Patrick's Day. Quadruple witching is behind us. We are looking at a weekly chart of the S&P 500 that is two closes below the weekly 20. The 50 continues to decline. The 200 continues to rise. PPO is at 0. The histogram is showing a neutral reading. And ADX is telling us that we continue to remain in a trendless market. This market has been trendless going back to October, okay, when the lows were put in. So this is a range. I've been saying this for a very long time, but it bears repeating. We're stuck in a range. We've been in this range since June to August. We cut below here, which is technically a look below and fail, which is targeting up here. This is the target. Now, if we look at the structure here, there's a lot of ways that we can analyze this. The simplest way is, a big 1-2 or a big AB. Okay, that's the start. Or a big bull flag. It doesn't really matter. The reality is we've come basically all the way to the middle of the range, and now we're starting to see volume pick up. And you're going to see that theme across all the charts. XLF and IWM are the red flags. We'll take a look at them. We'll look at this chart again with some of the fear greed indicators overlaid. But what I want to point out is, still in this descending channel, price reverting back to the 50% retrace. There's really no edge here for a bull or a bear. The closer you get to the 50%, 61.8, this general blue box, this is where you start to flip long. Anywhere here in the middle is an avoid, and up here at the extremes, you can play the other side. Well, now we've done this whole ABC bit. Okay? And from here, you generally get a move. It's possible it becomes a triangle, but from where I sit, I don't see that happening. There's going to be a move here either way. Either this low is going to break, or it's going to hold, and price is now going to continue higher in this higher low, higher high pattern that we've been in since October when the conditions changed. So we'll take a look here at all the majors like we do every week. QQQ is the clear leader. PPO reset to 0, bull cross above all the moving averages. There's nothing wrong with QQQ. This looks very, very good. This is an outside engulfing candle closed above the previous week's high. That is very, very, very bullish. And continues to defend the weekly 200. ADX here again, see, no trend. Why? Well, because we're range bound. We've been range bound. We'll continue to be range bound until we're above the August high or below the June lows. That being said, there's plenty of opportunity, and buy the dip is the play. This has been the play. Again, play towards the extremes when in a range. Now we'll take a look at the weakest one, IWM. See, very different from QQQ. QQQ above all the moving averages on the daily, IWM below all the moving averages on the daily. A ton of volume coming in here, and this is starting to fall apart. If you look at the weekly, you've got yourself a little bit of a doji, and the most volume you've had since the COVID lows, and or the top. Okay? It's very, very important, and it's a doji. It's some inverted whatever. There's a name for it. I'm sure you can find it. It doesn't matter to me. The point is it's indecision. Started the week basically where they closed that, and go figure, quadruple witching. That's generally what happens. They stole everyone's premium. As a result, they put in a PPO bear cross, but really back at the 0 line, and the histogram has gone negative. So this chart, very, very different from all the others. Is it the leading indicator telling us that everything's going lower? XLF closing below the 200 again. This is the third time we've been here. PPO reset to 0. ADX 30. So this is telling me risk off. Again, you can't go up while the financials are falling apart. And look at the volume here, same volume you've had since this COVID panic here. So The volume is telling me at XLF and IWM, you should not be owning these things, A, and B, that there's a large trend or a trend, forget the word large, there's a trend environment that is present in XLF, and the price action is down. So this is trend down environment. Okay, that being said, have we broken the trading range? No. So the momentum's telling me that you should be very cautious here, but the trading range here is saying, look, we're just hitting an extreme, and it's possible this is just some big broadening formation, in which case, hold on, you're going to look at something like this. And we'll be coming down here to this $28, $27 range. The high from way back here, $26.80. So yeah, the XLF and IWM are the weakest. SMH, QQQ the strongest. SMH above everything on the week. I mean, there's literally nothing wrong with this. This is a bull market. I don't know what else to tell you. This is what bull markets look like. I can tell you that the monthly chart came back to the 50. This is very, very healthy. Nothing wrong here. Ascending channel, hit the bottom of the channel, coming back up to the middle of the channel. So we'll see if she gets rejected like you had here. You pull back to the bottom again, put up another, higher low. You can zoom out to the quarterly and you can see, hey, look, this is just pulling back to the 20 on the quarterly. What's the slope of the 20? It's up. This is an uptrend. You had 3 down quarters, which pulled back, put in a doji or whatever you want to call this, and now we're looking to close above 234.59, which is last quarter's high. And you do that, that's a change in character. It's the first time that's happened since Q3 2021, right? Or Q1 2021, right? Where you have these sequential, you put in a low and then you close above the previous quarter's high. That is bullish, okay? That's not what you have here in IWM. This looks very, very different, okay? So one of these two is lying, right? You're not going to have a new bull market look without IWM and XLF participating. It's just not going to happen. So what we need to see, if you're going to remain bullish, what you need to see is this close above 189.56 in the next 2 weeks. And you've got the Fed talking this week, which is going to take up a lot of time, and move markets. And then after that, so you've got 10 sessions into Q2. That's my rant on equities here. I just want to, in summary, IWM, XLF, very, very weak, but have technically held the weekly higher lows, but very, very weak. This is an outside reversal candle, and she just went inside. Okay, so she can remain inside, and it be a bull wedge pattern, as long as she remains above 170.50 and ultimately 170.34. If 170.34 breaks, then you can look for price to come all the way back down to 162 in a hurry. That being said, this is the weakest. That is the summary. IWM, XLF, weakest. QQQ, SMH, strongest. And SPY somewhere in the middle. And all of them are range bound. All of them are range bound. Okay, let's take a look at some of the other players here. TLT into a declining weekly 50. Okay, you look at the monthly here, trying to capture the 10 and the 5. So got a ways to go. Looking at the quarterly here, just an inside quarter, no change in downtrend. So nothing to write home about in bonds just yet. You look at GLD, yes, there is a flight to safety into gold. And this is something that everyone should be taking note of. From where I sit, yes, this could be the top. Last time you had all this volume flow in, it was literally the top. That being said, you closed above this candle high here at 181.73. The close on the week was 183.77, so that is very bullish. Yes, this is a 5-wave structure, which would mean something like this is likely to come, but that being said, this is very, very bullish. And the monthly, PPO reset to 0, bull cross, ADX rising with price, with momentum. There isn't a lot of resistance left. And you look at this pattern, this is the cup and handle pattern. It's the textbook cup and handle pattern. Now I get it. You can say, hey, look, this is your 1, here's your 2, here's your 3, here's your 4, and we're just going to get one more high before we ultimately come back to 130, 144, put in that big wave 2, and ultimately go. That is possible. Don't get me wrong. 194, 193, maybe come in at 192. I don't know. All 3 lower highs. Who knows? But I don't want to guess. What the chart is telling me right now is that this is on the verge of a breakout, and everyone needs to be paying attention to what gold is doing. And we'll take a look here at the ratios, SPY to GLD. I mean, here's the weekly. You're looking at the 200. It gave way, and it did that before, quickly recaptured the following week, came back in and held. The 50 is clearly resistance. The 200 was demand, and now we're below it, and this is a lower low. So it is something to be concerned about, but you did have the exact same setup right here, and she recovered. So what I will say, I mean, especially if you put this on here, hey, it's still technically a higher low. See how she reacts to this key pivot, but this is clearly a concern for equity bulls. The flight to gold is in motion. And if it does not reverse this coming week, it will continue, and it's just the start. This is just the beginning of the flight to gold and the departure of equities. So keep a note, keep your open mind, watch this relationship. Okay, SPY to DBC, this is telling me commodities have basically have already topped, and they topped last June. This looks like an ascending triangle, A, B, C, D, E, something like that. Let's go back here, look at SPY UUP, pulled back into the 200. The 200 is holding, putting in a bull cross in PPO. So to me, looks very healthy so far on the daily. The weekly, still trying to hold here at this very critical level and not put in the bear cross. But if she does, it's telling you that flight to safety into the dollar, into gold is back on. And if you see that ratio flip up, you need to respect it, take some risk off, and go golf, as I like to say. SPY to TLT, we're not seeing that relationship flip here. Okay. So go back and look at some charts. Let's take a look at TNX. So TNX is breaking down. This chart looks to be at the 50, but not catching a bid. Okay, and this structure starts to look to me like an expanding flat, or just some big zigzag, and this is what we're looking at. So to me, very bearish. TNX breaking down with DBC. DBC accumulation, markup, distribution now in the decline phase. And you can see that below 23 is decline. It's always possible that this is a bear trap and the bulls take back over, recapture 23 to start the week. But if that does not happen, what the chart is telling us is that there's a change in character and that the inflation narrative is dead, and that lower prices are coming for this DBC ETF, which is the commodity index. So let's take a look at some individual stocks that are outperforming. NVIDIA continues to be the heaviest weighted stock in my portfolio. If you take a look at how this thing is doing, you do have the left shoulder head, the right shoulder. The profit target for this is the distance taken from the neckline, so roughly 326, looking pretty. Closed above the 1236 extension of this, which At this point, what we don't know is this an ABC, right, within the context of a downtrend, and this is what's coming, or was this the correction in an uptrend, and this is what's coming, right? Another mirror move higher, right? A mirror image move higher. We don't know that. So what we do is we watch to see how high we get on this move. And if you get above the 1618, if you get up to the 1618, the implication is that that was just wave 3 and you've got a little bit higher in an impulse wave before you start the corrective move and ultimately much, much, much higher prices. We don't know yet, but what I will say is they closed above the 1236, which opened up 269. And 269 is becoming a magnet, if not 300, which is this, obviously this resistance area here. And if you look at this, she's just riding the 5, riding the 10. Follow the trend, okay? She gave you the bear trap here, instantly recaptured. That was the go, and she's never looked back. Everyone's still waiting at the station. That being said, I mean, look, just look at the technicals. ADX rising with price, PPO rising. Take a look at the monthly, take a look at the quarterly. This is just a pullback in an uptrend. Obviously, she can come in, set a lower high, a higher high. We have no idea. We'll have to sit here and watch and wait. ADX is rising with price. It's at 46. This is an uptrend by all measures on the quarterly, on the yearly, on the monthly, on the weekly, on the daily. It's the strongest chart I can see. That being said, let's take a look at some of the other charts that I followed. Here's Crocs. Crocs to me looks like she's just completed one of these more complex corrective patterns. Histogram still negative, so this has clearly got some overhead pressure. Looking to flip positive. ADX resetting to 0. Zooming out to the weekly, you did get a sell signal. However, still above a rising 20, still in this uptrend, in this ascending channel. So momentum has flipped down. However, we are still in an uptrend. Higher prices are still projected. And this is very, very bullish. It allows momentum to reset on a weekly time frame while price resets in, as you can see, in time. And really everything has just been inside this candle from January 9th, 108 to 127. And so, yeah, I continue to watch this chart. I do believe that this is a very symmetrical move that we've just seen here. It's basically done. And that ended this correction. And watch to see if she can get back above this blue line, get back above the green line, stay above this 113. That being said, a loss of 110, 109, this general area, it's a great short with a target of 95 to 100. So a quick 10 points. Let's take a look at some other trades that I exited. I exited OII. See how this looks very, very different than Crocs. The pullback to the 20 did not hold. Lots of selling pressure coming in. PPO bear cross, ADX at 0. I'm looking for this to ultimately pull back to $13 to $15 range. It is an avoid for me. Another really, really positive here is Riot in Bitcoin. Let's take a look at Bitcoin closing above the 200 on the weekly here. This to me is a very different look than where we had it here. You did see the breakout. You did get the buy signal. The histogram did flip positive back here, letting you know that the negative momentum was waning. And you can see it here, and it's remained positive ever since. Okay. So Bitcoin, Riot, these dips are to be bought. EMA 5, SMA 10 on the daily. That's what I'm looking at. I'll give you even the Riot target. The Riot target's up here at $10, 40 cents, this downtrend. But obviously something to take note of. Did close above a declining. The slope is what matters. You're declining. So even if she continues to rise, you would look for sellers to come in because this is still technically a downtrend. Okay. You look at the monthly, do not forget where this chart has come from. Now it's possible that this is a big old bottoming, left shoulder, head, right shoulder setup. Way too early to tell. Point is, play the daily chart. Don't get too caught up on the narratives. Yeah. So that's all I've got in terms of charts. Let's take a look at one other thing. I'm going to point out here how people want to look at these narratives like fear and greed. My whole point is that you could have played something like Crocs, where she was extremely frothy up here at 125, the pullback to 110. I mean, very clear range bound, not a lot of damage, technically speaking. It's still a bull flag, and you've reset sentiment. And here's another one with NVIDIA, like we were looking at earlier, right? So back here, where everything in the S&P 500 was very, very greedy, very frothy in terms of bullish sentiment, because look at what just happened. In time, you've corrected, not in price, right? In time, she's gone sideways, basically, a little accumulation, maybe 3-5%, going back a month, but greed has reset to extreme fear. Okay, and so just because you have extreme sentiment does not mean the individual stocks are going to go down. That's not what that means. Okay, so it's just one of those things you have to take note of. Hey, be cautious, because this is what can happen, right? Crocs is what can happen. But this, if you're in from back here, who cares? That's a normal correction. If you're in from back here or here or here, who cares? You're still higher. And the same thing's true here with even SPY. Like if you bought any period back here in terms of a monthly, a weekly, quarterly ad, one of those investment type plays, what's technically changed? I mean, nothing's technically changed. You're just still stuck in a range, which is what you would normally expect to see. And what's happened, right? You get to the top of the range, you get extremely greedy. You get to the bottom of the range, you get extremely fearful. Okay, this is why I like to just follow the price action. Where do we know there are pivots, right? Where you had this pivot here back in December, the pullback into the start of the year, right back to where they found sellers. Of course you're going to find sellers again. I mean, yes, you can bust right through, but in generally speaking, you're going to find sellers. You're going to pull back. Where to? Where you previously found demand. And that's how this back and forth works. And I love to overlay some sentiment to give you an idea of just when you get to these extremes, it's gonna feel greedy, and when you get to the bottom of the extreme, it's gonna feel very, very fearful. AAII sentiment survey, right? So here we were just looking back at that SPY chart at this to start February. You went from 29 to 37 all in one week, which is huge after being below 30 the whole time. That marked the top in price, like we just looked at, right? Mark the top here. Started the pullback, okay? And then you get back into the sentiment now, March 15th, we're at 19%. So down here, now sentiment is at 19% for AAII. Okay, so everything is telling us, and you look right here, Jim Cramer is, I would be selling my Bitcoin into this rally. Right, so I just showed you the Bitcoin chart, how everything's long for me, right? We saw this pullback into the 200, a great buy opportunity. And yeah, I mean, recapture the 200, the 200 and the 50 here on the weekly. So, this is screaming risk on. This is screaming dollar has topped. And that's kind of what we're seeing here. Right? Monthly bear cross. So a weak dollar equals a strong Bitcoin. All right, so that's all I got. Watch gold, watch Bitcoin. QQQ and SMH are outperforming IWM and XLF. And make sure your money is in the names that are outperforming. Because there are plenty of names that have set new lows and that are continuing to set new lows. And it's your job to avoid those names, find the names like Nvidia, find the names like Crocs, right? Find the riots that are breaking out and allocate over there. Sit tight and be patient. And if you like the video, hit the like button, subscribe to the channel. I'll see you next week.